PADINI is a Malaysian domiciliate investment holding company headquartered in Highcombe Glen Mary Industrial Park, Shah Alam. Incorporated in 1971 as proprietorship under the trade name Hawaii Garment Manufacturing Company, PADINI was initially engaged in the manufacture and wholesale of ladies' wear. The company subsequently added men's and children's line to its offering when it established in first 3 brands from 1975 until 1987. In 1988, PADINI discarded its role as wholesale to take up the role of consignor. Therefore, the first single brand store distributing seeds was opened in 1992 in Sungai Wang, Kuala Lumpur.
Liquidity ratio is the measure of the firm's ability to meet its maturing or short-term obligations. Based on the calculation of current ratio in 3 years above, it's shown that 2020 has higher ratio than 2019 and 2018. It indicates that the company is able to cover its short-term obligations using its current assets effectively better in 2020 than others year. And the current ratio is good because it keeps increasing by each year. Next, based on the calculation of quick ratio for 3 years above, 2019 and 2020 has the highest ratio with 2.58 times. It indicates that the company is able to cover its short-term obligation using its most liquid assets effectively better in these 2 years. The performance of company is good because the ratio is increasing in 2019 and maintained in 2020. While for the net working capital, the amount is decreasing in 2020 but it still has high amount, so this positive amount indicates the amount of current assets that are financed with long-term financing of PADINI is doing good. So, for overall, PADINI Holding Berhad is doing good in terms of their liquidity performance because the current ratio and quick ratio of PADINI in 3 years from 2018 to 2020 is keep increasing each year. Therefore, PADINI Holding Berhad just need to maintain its liquidity performance.
Next, we move to the leverage ratio. Leverage ratio is provide an indication on how the company's asset and business operations are financed using debt or equity. Based on vertical analysis aspect, in year 2019, only 22.52% of funds come from debt to finance PADINI's investment. It is shown that 2019 have a low financial risk than year 2018 and also year 2020. While for the debt to equity ratio, the creditors provided only RM0.012 for RM1 provided by owner, and it is the best one rather than year 2018 and also year 2020. For the times interest earned, year 2019 indicates that company has a higher ability and lower risk of avoidance.
Inventory turnover ratio for PADINI for 2018 is higher than 2019 and 2020. In our opinion, 2020 is lower because this company take a low risk strategy as there is a low chance of stock out to meet the production and sales need. For average collection period, PADINI company is not performing well in 2020 because it took 13 days to collect the invoice from the customers. In addition, shorter period is preferred as the cash cycle is lower and more cash is available in the company to meet cash requirement. PADINI company took about up to equal days in 2018 and 2019 to collect all debt. The highest paid-to for PADINI is in 2019. Higher ratio is better as it indicates the more revenues can be generated per ringgit of investment or in fixed assets. It shows that the company has low fixed asset turnover rate that may indicate the company is not using in assets effectively. The highest status for PADINI is in year 2019. If we compare from 2018, 2019 and 2020, the lowest one for PADINI is year 2020. The higher asset turnover ratio, the more efficient a company is at generating revenues from its asset.
From the data above, it shows that the gross profit margin for PADINI company has slightly decreased from 40.95% in 2018 to 39.14% in 2019. Referring to the bar graph, we can see that the operating profit margin of PADINI company has achieved its highest level in 2018 among 3 continuous years because the company made a higher operating profit in that year. PADINI company's net profit margin ratio has marginally dropped over 3 years according to this data. PADINI company had the lowest ratio of 5.55% in 2020. This means the cooperating is producing a smaller profit while incurring more operational costs. In the case of PADINI company, we can observe that the return has decreased with time. The best return was 19.28% in 2018. The return on common equity has decreased during the year. According to the statistics provided, this is due to the fact that the year's net income was smaller.
The next one is market value ratios. As we can see, PADINI's company earning per share in 2018 was the highest compared to the other 2 years, which was 0.27. It shows that the company's earning per share has fallen to 0.24 in 2019 and 0.11 in 2020. So that we can observe the trend for PADINI BERHAD is decreasing after 2 years. More earning per shares of corporation show that the investors want to purchase the company's shares, which will result in higher productivity and income. The last one is conclusion. We can conclude that PADINI Holding Berhad has a good asset management ratio because the company has had a high turnover ratio, average collection period, fixed turnover ratio, and also total asset turnover ratio. Next, for both debt ratio and debt to equity ratio, the highest ratio is in year 2020, following up by the year 20 and 18, while the lowest ratio is in year 20 and 19. Next, for operating profit margin and return on total assets, the highest ratio is in year 20 and 19, following up by year 20 and 18, while the lowest is in 2020, which defines that the company is making higher profit and efficient utilizing its asset in generating net income to the investors, so that the lowest ratio in 2020 might happen due to the higher operating expenses incurred by the company.